This is Matt from InvestiQuant. Today is Wednesday, January 13th, 2021. And so far, the markets are pushing higher following this morning's flat open. So this morning we looked at a study based upon a market profile pattern that developed yesterday, what's called a neutral center day. And that's a day where you breach both the high and the low of the first 60 minutes of trading, of regular trading hours, and then close within that 60-minute opening range. So that happened yesterday. And when we looked at a study based upon that, it had favored the upside for the S&P. The other markets were very neutral on what had happened following that pattern in a similar market environment and opening location. But for the S&P, it had pointed higher. That is currently developing right now. We are trading higher into the afternoon. And what I want to do is follow up that study with the exact same study, but add a little bit more context around where we're trading at in the second half of the trading session and see what it has led to going into the close. See if maybe it will hold up. So let me go ahead and hop into Discover, and we will follow up that study from this morning. We're going to use all four instruments, although if you remember from this morning, the study was really only good for the S&P. The others were not really attractive. Very neutral readings there. We're going to be using a 3 p.m. Eastern Time entry for this study. It'll be exiting at the close of regular trading hours, which is 4:15 p.m. Eastern Time. Now, for the opening filters this morning, we used gap down within the prior day range, so I'm going to go ahead and replicate that, put that in here. Next, I'm going to go into the post-open filters and add just a touch of context around what has happened so far today. And all I'm going to say is that at 3 p.m., the market is trading in the top half of the intraday range. We're currently trading right up near the highs at the time of this recording, so I'm going to assume that is still going to be true at 3 p.m. Eastern Time. Next, I'm going to go into this profile pattern section, and I'm going to grab this neutral center day type from our first category here within our profile patterns library. And as I mentioned earlier, neutral center day type is a market profile type of day type that describes when the market breaks both the high and the low of the first 60 minutes of trading and then closes within that range that was made within the first 60 minutes of trading. So like yesterday's price action there in the S&P. And then next, I'm going to go into the indicators, put us above a 10 and above a 200. So we are in a similar strong market environment, and then click View Results. And here we go. These are the results of going long at 3 p.m. Eastern Time, exiting at the close, 4:15 p.m. Eastern Time, when you gap down within the prior day range following a neutral center day. And at 3 p.m., you are in the top half of the intraday range. This is taking place above a 10 and 200-day simple moving average. And if we look at the results here to the right, dating back to 2003, 53 samples there in the S&P, 40 in the NASDAQ, 48 in the Dow, 56 in the Russell. And these win rates look very similar to what we saw this morning, where this pattern had been favorable to the S&P off the open, and it looks like it is favorable again into the close when you add this little bit of extra context around it, and that gets you a win rate of 60%, which is very similar to what it was earlier. The NASDAQ coming in at 48%, the Dow and the Russell both exactly 50%. So those were all pretty neutral based upon entering at the open for those three instruments, whereas the ES was strong. So this looks very, very similar to what we saw off of the open. If we look at the average win, average loss, average win a little bit bigger in the S&P. The average loss is larger in the NASDAQ, average win larger in the Dow, and pretty similar sizes there for average win and average loss in the Russell. But this is very similar to what we saw this morning, and S&P being favored historically with this pattern. S&P just having a little bit of the different characteristic with this pattern than the other instruments, which are very neutral. So hopefully you found that helpful. Good luck today, and we will see you next time.